What up, what up, what up, what up, what up, YouTube? Welcome back to another major market breakdown. Uh, Conditions have slightly shifted this week. We had gotten a whole lot of selling. Let me move that out the way. A whole lot of selling on the dollar here, but we're in a time of year where the dollar likes to kind of be a little bit stronger. Same thing with Nasdaq. Usually towards the end of the year, finishes off a little bit on the stronger side. We didn't, as far as price action goes, we didn't. We closed up under this little equilibrium that I had, but it didn't really dip very far below it. As well as this trend line here, it didn't even come back into it. It still stayed above that. So what we're seeing is a likely change of the wind here. A whole bunch of signs to kind of point that out would be first being a swing high, breaking that last swing high there, and then it coming back and not going fully back into the downtrend that it was in. And then from a fundamental perspective, we got a whole bunch of good U.S. data before the government shut down. Government, as far as I know, I'm pretty sure the government's still shut down right now. But there was good U.S. data that came out, economic data, jobs data, to kind of support the dollar. So I'm thinking along this time, at least for the short term, we're probably gonna at least retrace back to this last swing high here, and then we'll see how price decides to move off of that. We may if we close above here on like the daily time frame, then I think we may go even test out this 100 level here, just because it's just like a path of least resistance. There's not much liquidity to stop it from going there, especially seeing as we have like 3 months left of the year for it to make this move. So plenty of time for it to make that move. And like I said, the U.S. dollar likes to be a little more bullish towards the end of the year, so we could be seeing that come into play soon. What is that going to look like on our pairs? I actually have, sorry, um, I mean to usually not have anything on the charts before I do the videos, but just lets me explain it in more depth. Bringing it up, but you kind of have it there. We've gotten some divergence over the past few months of this run up on EU. So if we're seeing exhausted selling and signs of reversal on the dollar, then we'll be looking for the exact opposite here on euro. Uh, the dollar looks like it's going to be strong. Euro looks like it's going to be weak. From a fundamental standpoint, the ECB has been steady to shaky, while the dollar's been kind of steady to bullish over the past couple of weeks. So starting to see the like I said, that wind shift, and with the divergence on the chart, I'm taking a small position as soon as markets open. I'm gonna let this position ride. Hopefully we don't go back and test that high again. I don't think we really will. But once that does happen, I have sell stops down here. Just because on an overarching time frame, on a really, I take it up to the weekly, we're sort of in an area where price tends to kind of drop off. We have this trend line. It's not perfect. Not, of course, it's never gonna be a perfect trend. I should have really just put like an ellipse or something there. I could really just get rid of that. But it's in an area where it seems to uh, traditionally, relatively seems to sell off from, at least in the overarching. So I'm taking a small, seeing the dollar bullishness from this level with the divergence, pretty clear divergence on the chart. I'm taking sells from here, and then I'll be taking bigger sells once this area here fails. I have some sell stops. As you can see, I have some sell stops down there, just kind of chilling, waiting for price to dip down. Same, conceptually the same thing on GBP USD. I didn't actually have this one marked off, but it is diverging all the same. And then just to give you some quick targets. I think we could see both of these targets touched before the year's end. And let me get rid of that little box there. Um, and honestly, for you know, this slight up, for this uptrend that it's in already, I feel like it's a solid opportunity to find some longer term buys. But for the next couple of months, we're most likely going to be in a sell trend to pull back from all this buying here. All right. Same thing on NZD, USD. Although I think NZD USD is gonna move quite a bit cleaner than the other two. Like this low here. Let me see if I think it's a bit closer. Yeah, quite a bit closer for sell stops on NZD USD than it's like Euro USD. It has less room to move to where I'd like to just 100% be in sales. I wouldn't hate an entry from where price is now, but I think even better entry would likely come. Yeah, likely a better entry would come right about here. So like let price buy up just a wee bit, and then we probably have the best possible entry for NZD USD here. Yeah. Yes. Okay, and then 80 CAD. No, we finished with 80 CAD, didn't we? Well, it hit TP, guys. It didn't actually give the pullback opportunity, another pullback opportunity. I thought we were gonna get one more before it went and touched these highs, but I mean it's kind of like meeting resistance and fizzling out. So there's still opportunity for when this comes back down some. Let me get rid of these. Get rid of these. They're all posted on TradingView, I'm pretty sure. But like this comes back down, I'd be willing to take an entry here. A little bit smaller. Yeah, I'd be willing to take an entry here, and I'd be willing to take an entry here for the buy on 80 CAD because I still like gold over everything else. And 80 CAD is basically a gold trade, but you gotta wait for it to come back down. Just like gold is overextended, 80 CAD is a bit overextended in itself. It's not too crazy of a run up, but letting me know that it has a little bit of room to come down because gold has some room to come down, as well as hella room to run up because this run up hasn't been as extended as gold, but gold can keep running to 4,000-5,000 if it feel like it, and there's nothing that any of us could do about it. This alert, let me move this alert down. Yeah, I'm gonna get an entry there. If this area fails, then I'll get out and then get back in. That area fails. I don't like those wicks. That area fails. I want this low one right here. I want to fill in that wick right there. I think that'll probably be the best price action there on that. And then let's look at some of the big dogs. I want to get. I swear, I'm telling y'all, I want to get in, but it ain't. It gave me this little chance, but it wasn't like a real actual opportunity because I wasn't like looking hard enough. So if you guys are watching all of the major market breakdowns, then you might have got in off of that because I said I wanted to get in off of that, but I didn't. Sucks. Missed out on it. But this area still looks. I mean, doesn't look like it's been completely forsaken. I think honestly, just that wick down into it just made it even better of an entry when it comes back into it, possibly. We'll see. I would like a pullback that would let me get in here. This is when I first was like, I really want to get in. I really want to pull back to here. So if this area fails, then I'm getting in heavy on this one. But I'll be definitely looking to get in some buys here, as like I said, towards the end of the year. It likes to be on fire. So even though it's been a little bit extended, it doesn't mean it can't keep on being slightly inflated. Now I will say, over the next like year, 2 years or so, we should get some major correction, like super correction, because everything is like super inflated. Like prices are ballooned, valuations are extra high, especially in the tech sector. So I want to say, for all my long term folks out there, make sure you're diversifying. If you're just investing in ETFs, you're gonna be sad. You're gonna be sad some days. It's fine, because you know what I'm saying, especially if you're a younger guy like me, you got a lot of years to do this investing, so it's fine. You can sit through the ups and downs. But diversify, just diversify, so you don't feel it so hard. Buy GLD, get some small cap, mid cap, uh, agricultural stocks, tech stocks, um, um, manufacturing stocks. Try to diversify. Make sure you're if one half of your portfolio is red, the other half should be green. You know what I mean? If everything in your portfolio is red, then you're not diversified enough. You know. You're not. If there's any point in time where every single thing in your portfolio is red, you're not diversified enough. That means, because that means everything's confluenced together. You know what I mean? Because if something's going down, something else should be going up. That's one of the laws of Paris. If the euro is going down, then conversely, the euro USD is gonna go down. USD is going up. Doesn't make it so necessarily. It's not causality, but just a function of the reality we live in. But let's take a look at gold real quick. Now I'm talking about it. Just extended. I want to get in gold too. I want to get in gold so bad, but it is not giving up an opportunity to get in there. I'm gonna be done in a second. I'll pick you up in a second, son. He don't have patience like his father. But yeah, nah. This is super extra extended. The best advice I could give is to wait, just like I'm doing. Just wait for a good pullback. Let me see. Let me put a fib on here real quick and see where I would like it the most at from where it's at now. Let me go from this low. Yeah. So this red line here is honestly probably the next best entry. Let me put the volume on there and see something real quick. Go down to the 4 hour. It's a little session volume indicator. Yeah, it was the volume was definitely like mad low a few times right here. So yeah, I do like this entry. Like 3600. 3600 is where I'm getting in, guys. Go small. Like 3652 roughly is where I'd like to get in on gold. Most definitely. Yeah. Yeah, and then we're still in GJ. And it's starting to do what I thought it was gonna do, as you can see. Um, mark this up on the live session from the other day, I believe. Price is giving us some bullishness here because we have this full. Let me get out of the way so you guys can actually see. Got this fully finished 5-point downtrend. Now we're doing our 3-point correction right now. So boom, we're probably gonna reject that, come down a little bit, and then come up to here. I want my entry off of here. Move that down just a little bit. I want to sell GJ off of here, so I'm expecting GJ to be slightly on the, more on the bullish side this week, ish, I guess. It's gonna, if it rejects this off of the open, then yeah, it'll probably take all week to get to here. What I'd like for it to just like run up real quick and go ahead and tap this, so it can go ahead and give me that entry and be done. But we're probably gonna get. We've already gotten this first initial first push up. Gonna move this really sort of rejecting exactly what my thing was. Starting to reject, but not still a bullish candle. See that reject, come down a little bit, push higher. If it doesn't push all the way to this box, it's fine. All we need to see is another downward move, a wave, and then a wave higher than that, and then we'll have a setup for our sell. This is just kind of like a framework to how I'm visualizing it play out, so you guys can kind of understand that. All right. I hope this wasn't too long. Try to keep them short and sweet and to the point, so you guys can, you know what I'm saying, be in and out, know what you need to know, see what you need to see. If you haven't already started using the bird's eye tool, this is like, you know what I mean, one of those things that you need to put in your back pocket as a trader, because it's completely free and it helps you, analyze the market. So it's a forward thinking sentiment tool. So this is going to tell you either incoming bullishness, incoming bearishness, or neutral momentum detected. As you can see on your screen, neutral momentum has been detected for GBP/JPY, mainly because the markets are closed. But when it's about to make a move to one side or the other, you can come over here, search in the pair, and it's going to tell you what that move is going to be. So if it's going to be stagnant for the next couple of hours, it's likely going to say neutral momentum detected. If it's going to be probably bullish in the next couple of hours, it's going to say bullish momentum incoming, or slight bullish momentum incoming, or bearish momentum incoming, or slight bearish momentum incoming. So this right here is first of its kind. There's no other tools out there that really actually think forward into the markets, using the markets. They usually just kind of like give you what already just happened. Rather, this is gonna give you that forward thinking ability, so you can actually be prepared for what's coming next. So scalpers, you guys can really just use this as like your holy grail. Day traders, swing traders, this could be your final confluence, one of your middle confluences, in your trades, to kind of help you gauge where you're at in the market, right? So it's completely free to use. Link is in the description. Make sure you guys go use that. All right. I love y'all. Make sure you're kind to somebody today. I'm gonna catch y'all on the next one.